I believe the line is clear. So good morning. You're welcome to our webinar series hosted by the CFA Society Nigeria. By way of introduction, I'm Chuka Madwabun, a member of the Board of Governors of the Society, and I'll be moderating today's session with two distinguished speakers and disruptors. So just by way of background, the CFA Society is a member society of the Global Network of Finance Professionals. Among our activities and mandates, we strive to ensure transparency in the capital markets and improve trust in the investment management industry. So before we start, I would like to run through a few housekeeping activities. So this webinar is expected to last for an hour. I would engage our speakers for 35 minutes and reserve 25 minutes for Q&A, from the participants, from you. From experience, we typically receive lots of questions, so it's unlikely that I'll be able to read out all your questions. However, I would ensure that the selected questions address most of the questions received from you. So I would appreciate if, during the webinar, you can insert your questions in the chat box. Now, during these questions, during the webinar, we would ask you questions just to get your thoughts on some matters that, we're discussing with respect to the FinTech and industry, as well as the investment management industry. So would appreciate your participation on the polls that would put up. So today we'll be discussing the effect of the pandemic on the FinTech sector and how it is disrupting the investment management space. To achieve this, we have invited two distinguished speakers and game changers in the investment management industry. They are Mr. Olushoga and Mr. Razak Ahmed. So just a brief overview of our speakers. So Sheye is the pioneer managing director of Parthian Partners, which is one of the top brokerage firms in Nigeria. Parthian Partners was responsible for setting up the first app that enabled users to invest in treasury bills in Africa. He previously worked at global financial institutions such as Lehman Brothers and Citibank when he was in the United Kingdom. On the other hand, Razak is the CEO and co-founder of Cowrywise, a very popular tech platform for making savings and investments. His professional background is diverse. It spans oil and gas and investment management. He is a graduate of the Y Combinator program, a program for promising entrepreneurs and disruptors. So I would like to welcome my speakers. Okay, great. Razak, Shey, you're welcome. So in order to start, I know that we have a diverse participant, and I would like to assume that everyone understands what FinTech is. From personal experience, the first time I heard of the word FinTech, I thought it was a client. I thought it was a company. I didn't know it was an industry. So I mean, this is to you, Razak. Can you just give us a quick overview of what FinTech is?
Thank you. Yeah, thank you, Chuka, for the introduction, and I'm quite excited to be here. So, start with, I'll address that from the roots of the word, actually. So, FinTech is a combined compound word of finance and technology. So it is the fin in finance and the tech in technology that make up the word FinTech. And in a very simple term, what it means is the application of technology to provide financial solutions. And financial solutions range from payment services to lending, to core banking services, to wealth tech, to identity management, and so much more. So in a very simple way, it's just the application of technology from hand to hand to deliver financial services in all its forms. That's just what FinTech means.
Okay, great. That's yeah. Thanks for that detailed description. You know, now the other thing that we see is, you know, trying to draw the line, you know, between fintech and other industries. So, for example, we see social media platforms, you know, enabling financial transactions. We know that WhatsApp, for example, you know, is rolling out its payment solution platform. So, and this question is to share, how would you differentiate, you know, other industries from fintech? Would you call, you know, a media company or a social media platform, would it now be called fintech because it uses its platform to enable, to facilitate, you know, financial transactions?
I guess the way I look at it is that the space can be defined across different functions, right? So when you're talking about financial technology, you can't just limit it to just one thing. I think that you have people who call them, say that, okay, you can break it down into different industries within an industry. So you can say, oh, blockchain. People who are doing blockchain, that's fintech. People who are doing regulatory technology, so coming up with ways by which you can automate the process of that in the financial sector, that's fintech. People dealing with money transfers, that's also fintech. People who are doing insurance, so trying to sell insurance using technology, that's also fintech. So, you know, it's, I think that, you know, people who are, I think the space, you know, people like even in like Amazon, people like Facebook, I think that these guys would also be termed as financial technology institutions because basically they're basically using technology to enhance finance. So I never look at technology as an industry. I look at technology as an enabler of other industries, basically. And so as long as they're providing a financial service using technology, in my mind, they are also fintech. So the question is, what sector are they playing in? And then that, you know, creates a wider debate.
Yeah, okay, I get you. Now that brings me to this other part, which is, you know, traditional companies or companies that basically provide brick and mortar products, trying to position themselves as fintech company so that they can get, you know, they can appear sexy and they can, you know, they can get a very high valuation. You know, so for example, what stops me as, for example, you know, the MD of a bank like, let's say, Zenith, right? If I'm the MD of Zenith Bank, you know, I have a banking app which enables me to, enables my customers to carry out transactions without actually coming to the banking hall. You know, what stops me from calling myself, calling Zenith, you know, a fintech company, and at the same time commanding the type of valuation, you know, attractive valuation that applies to fintech companies. So
okay.
For
Okay. So let me start with that. So from time immemorial, there has been application of technologies across different sectors, from automobile to financial services, and so on and so forth. Traditional banks, traditional investment management companies also apply technology to deliver some of the services they offer. It is the degree of application and how technology forms the core or the first principle of the service they deliver that really matters. So for example, I'll take the entire banking industry in Nigeria as an example. There is an existing infrastructure that the banks have built over the years, and that is largely the branch networks. And when they build products, when they build services, you realize that most of the services terminates at the branch level. So if you want to open an account or you have a complaint, the next thing you hear is go to the branch, because there is an existing infrastructure that allows them to deliver the service they know how to deliver best. But if you look at the way the fintech companies are structured, from day one, from the first principle, from end to end, there is no branch in the equation. So from end to end, the user experience starts and terminates on the mobile phone most times. You hardly see a situation where the termination of the service before you can actually have delivery ends at a branch, because they don't really have a branch. So for you to do that as a traditional bank, or as incumbent banks or traditional investment management company, there is that need to overhaul the entire business model, the entire infrastructure that you have to be able to deliver that kind of service. An example is this: if a bank runs an ad, for example, or a social media campaign, and a nimble, agile fintech company runs the same social media campaign, the amount of impact or user acquisition that the fintech company will have will be 10 times more than what the bank will have. And you know why? Because from design, by design, from first principle, the fintech company is terminating everything right from your mobile app. So in 5 minutes, you can actually complete everything. But from the banks, traditionally, the decision-making process, product development process, engineering, everything has bank branches as part of the equation. So if they actually want to do that right now, it means that the entire branches will have to be rendered null and void. Like, okay, we are not actually using those banks anymore. We're not actually using those branches anymore. So that's the major difference. It is not that banks or investment management companies are not applying technology to deliver their services. They are actually. And we've seen increasing integration of that technology in the way they deliver services. What differs largely is the degree of integration and the role that technology plays. I remember very well IT departments in a bank or IT department and investment management company made up of someone who handles the networking and so on and so forth. You hardly see like core engineers who develop the softwares, like software developers, right? You hardly see that in the past, but we're beginning to see that coming up right now. So the gap is beginning to get narrower and narrower, and it will get narrower by the day as we progress. That gap will be narrow because there is this knowledge in the industry that almost all major companies, all consumer interfacing companies, so long as you sell something, you actually have the potential to be a financial technology company, so long as there is money involved in the way you transact business. If you're selling something online and you have the user base, and you're a consumer tech company, it doesn't matter what you're selling, that opportunity is there for you to actually incorporate financial services in some ways. So what we are seeing right now is a line that is getting blurry and blurry by the day. Blurry between banking, core banking services, and investment services, investment management services. Blurry between social platforms and financial services. Blurry between logistics companies and financial services. So the world is becoming more and more consolidated. The experience is becoming more and more consolidated. And the winner eventually will be companies that have the bigger share of consumer interface. So if you have high, if your interface with the consumer is very huge, like you have huge consumer base, then the opportunity is there to actually deliver additional services to them.
Okay, that's fantastic. It's from what I gather, it's that end-to-end user interface that is really, really critical. That helps to draw the line. Shaya, do you have anything to add? Just a few seconds before the next question.
So I tend to agree with Razak in the sense that what makes it different is the end-to-end interaction. So where from start to finish, everything that is being done is done electronically and it's online and it's all digital. without the need of the brick and mortar, and even your customer service should actually be able to respond online. I think that you've seen companies, I think that the world's a global village, right? So if you look at companies like Monzo or Revolut, all of these kind of like challenger institutions in the UK or the US, right? They all come up with different ways of doing this thing. So those are banks, but they are digital banks, and they're digital banks in fintech. So you cannot compare them exactly with the likes of, Barclays or RBS or First Bank. They're very different in terms of how they run their businesses. So I think that, as far as once you're able to do that, then you're virtually a fintech company. Now, you would then see places in South Africa or even Kenya where companies who were typically retail institutions, just doing retail, right, have then pivoted to go and get what you call some sort of banking or financial regulatory license, right? And then use their digital networks to actually promote other things, right? So they then provide financial services of some sorts, right? So complementing what Razak said earlier on, right? I think that the industry is open to a lot of people to compete into. Even the telcos, I think, would actually play a major role in the future in terms of the space and in terms of what they can do. So that's basically how I see it. So I think that if you're able to provide that digital experience end to end, using finance and providing some form of financial services solution that people like, then I think that you're a valid fintech institution.
Okay, thanks, Sheye. Just a follow-on question, regarding the innovation in the fintech space. What type of new products has the players in the fintech industry been able to roll out that traditional brick and mortar companies have not been able to deliver?
Razak, do you want to go first or should I go first?
Okay, yeah, I can go first. That's fine, no problem.
I thought Sheye would go first, but it's okay. Razak, if you want to start.
Okay. Well, overall, if we look at it from a big picture point of view, there hasn't been like new products per se, right? For example, payment has always been in existence. Like moving money from Mr. A to Mr. B has always existed. Lending has always been in existence. Like banks have always lent to people, right? Saving has always been in existence. Investment has always been in existence. What has actually changed is the how. And that is where the innovation is actually happening. The how. And that explains how the overall user experience is being re-engineered from ground zero up to ensure that users are able to have access to these services in a more interesting and exciting way. So for example, in Nigeria today, you can make orders for products from anywhere in the world, say from Amazon, and the product gets delivered to you, right? As a consumer, what you see is basically you making an order and the final experience is you receiving that order. That's an example. But that doesn't make any difference from me going to, in terms of the fundamental, right, like first principle, me going to a Dumota market, pay and purchase something and then come back to my house. All I'm doing is basically buying, right? But the how of buying is what has changed dramatically. And that's exactly what is happening in the financial service industry, right? Mutual fund has always been around. Saving has always been around. Treasury bill has always been around. Payment has always been around. What is changing fundamentally is how those things are being accessed and how users, enjoy the transparency, the convenience, the user experience, and the accessibility. And more importantly, these things are now becoming more affordable because you can now build an end-to-end experience at a fraction of the cost that you will have incurred if you had to do that like 5-10 years ago. 5 years ago, it would have been very difficult for an entity to come out to say, I want to build a digital bank. because there are a lot of other conditions that need to happen, right? For example, you need to have a critical mass of users who are on smartphone because you're using the smartphone as a delivery point. You have a critical mass of users who are on the internet because that is your primary infrastructure or the primary rail upon which your service is being delivered. If those conditions don't exist, then it will be a very, very difficult task for you to innovate upon. But with those conditions, existing, increase in number of smartphone penetration, increase in number of internet penetration, and you can build product on those those infrastructure points or on those rails to deliver additional services. So overall, what is changing is the how, not that the product is being changed. Because at the end of the day, what matters to the consumer is the value the consumer derives. I want to make payment, and I do that easily in 5 seconds. I want to save, I do that in 10 seconds. I want to invest, I do that in 1 minute. That user experience is where innovation is actually happening. And frankly speaking, it has just begun.
Okay, awesome. Yeah, thanks for that explanation. I would just share. I'll come back to you, but in the meantime, I would just like the first poll to be set up. So Frank, can you please do that? Yeah, then Sheye, you can add to what Razak said, and this is in the context of the informal sector. So Nigeria is largely driven by the informal sector. So, what is happening with respect to product innovation, FinTech product innovation? How is it impacting them?
Okay, so for me, I think that product innovation is basically going to come from solving problems. So meaning that FinTech is going to help reduce the level of friction that customers have in terms of their experience with their normal day-to-day services. So meaning that you go to a bank, you're frustrated about how things are getting done or things are just more complicated. So I think that FinTech is just supposed to make it simpler, easier, and convenient. I think that that's how I see it. And I think that those are the things that will drive that level of innovation in terms of what sort of products that come to the marketplace and in terms of how they are received by consumers and customers. The other thing I would like to say would be, when you talk about products, right, I think that there are very few things that don't already exist in some form of traditional form. We're just modifying the way it's been delivered. And that's actually where things like artificial intelligence will be able to allow FinTechs to provide something that the traditional services cannot deliver. Because as smart as we all are, right? The the computer, when it's trained to understand the way people behave or interact with different products, right? They're able to come up with better solutions, because what they're able to do much more effectively is to aggregate all the information that they have to provide solutions or algorithms that provide solutions for those customers, thereby improving the overall customer or user experience. And that's something that you'll find hard for the guy who is just behind the teller to be able to come up with that, oh, the person bought this and the person wants to do something else. So I think that it's once we move away from the basic level of just using APIs to make things convenient and easy and start doing a lot more artificial intelligence or machine learning, the gap between the traditional services and those who are doing the actual FinTech stuff itself would actually be huge. That's why sometimes when you go on Amazon, you're trying to buy something, but they've noticed that maybe 50% to 60% of people who buy item X will want to buy item Y alongside it. So before you've even decided to look for item Y is popping up on the screen that, do you want to do this? And so it's, that sort of learning or value addition is where I think that benefit things would begin to, the difference begin, or the value begin to show, and the difference begin to be a lot more obvious. Now, how does that relate with financial technology or FinTech as it were? In the sense that if they know, they would have more information about, oh, this particular customer, usually, or people who are doctors, typically get X amount of money around this particular time. So it might come up with things like, oh, maybe they need to save, right? Or different products where they need to invest in. And it can come up with different suggestions, and then those people are able to do those things. And then on the other hand, you might know that, oh, around this kind of time, maybe it's during Salah or the Christmas holidays, people's expenses are up. So they might start to, look for better loans or better products that those people would need, right? Using artificial intelligence. So for me, I think that AI is what will actually really differentiate what the traditional guys are offering versus what the fintech players are offering. That's
okay.
how I look at it.
Sure, thanks, Shay. At this point, I would like to go to the polls. Yeah, so for you, the participants, I would really appreciate if you can quickly round up because we would like to. Razak and Shay, can you see the polls on your screen?
Yes.
Yes.
Okay, so that's, I think we'll have to end it now. And in the interest of time. So that leads to the next, question. And I'll just read out the questions for the purpose of everyone. So basically, we wanted to find out what segment of the fintech industry has fared the most and which one is actually worst hit. So basically, who are the winners and losers? And with respect to the winners, most people feel that payments,
Yeah.
56% choose payments, then followed by e-commerce, 43% choose e-commerce. Savings and investments, 22%, they feel that, savings and investments is the right place to be. Then on, lending and virtual currencies, people are not too optimistic, although I'm quite surprised because I keep on hearing about Bitcoins and the likes, people making mad money from so, and reverse is the case. So winners and losers, it's more of which one do we think will do well and which one are we not so optimistic about. Razak, you are in the investments, savings and investment management space. So what do you think? Do you agree with what you're saying?
I think my first observation is that the first and second questions are like opposite and they look consistent with respect to people's responses. So it actually shows that people know what they're saying here with respect to their responses. But in terms of the response, I think I agree with the first one, payment, and for obvious reasons. In the current climes, the first thing that comes to mind when you want to make payment is how do I make that electronically, right? And we've seen businesses, individuals embrace digital payments to carry out transactions. So it has actually elevated the importance of electronic transactions. And this is not just in Nigeria, actually, in emerging markets and everywhere across the world. COVID-19 has brought to limelight the importance of going digital. So I agree with that squarely. And the second, the last part, which is lending and virtual currency. Lending, there are two sides to that. Obviously, expectation is that COVID will affect jobs. When people lose their jobs, they find it difficult to pay their existing debts and so on and so forth. So obviously, lending companies might find it relatively difficult to manage default rates, but I think results, especially when you consider the costs of those debts, the interest rates on those debts, and compare that with the default rates, whether the net effect will be positive or negative. Expectedly, we should have a negative effect, but whether that is the reality or not is a different ballgame, right? And then for savings and investments, well, interesting. So when COVID started, frankly speaking, we had some funny expectations with respect to how people would behave. And our expectation was that a lot more people will rely on their savings and investments, to manage the fallout, the economic fallout of the COVID situation. So at that point, we ran a poll, we ran a survey, of our existing users. And what we discovered was actually quite shocking. Well, should I say shocking? It was not our expectation, basically. what we realized was that from the survey that we carried out from our existing users, we realized that more than 90% of them actually confirmed that COVID hadn't affected them in a negative way, which was against our expectations. Then that's one. Then the second part was the survey carried out by BFA Global. BFA Global is the company in charge of the Catalyst Fund. They're sponsored by JP Morgan and UK Aid. They also carried out similar survey looking at how COVID has affected individuals in emerging markets. And this got across Nigeria, Kenya, and some Asian countries. Similarly, there is a similar trend in that because a lot more people weren't as affected as one would have thought without the survey. Now, what we have noticed, however, is the behavior that people have exhibited in the past 3 months. And that behavior conforms with the traditional theory of finance, that when there is huge uncertainties, what you'll expect people to do is actually to play safe. Play safe by going short, by playing on the short end of the curve. And that's exactly what we have seen. We've seen people change their investment behavior from looking into long-term to concentrating their savings and investment on short-term instruments. And these are generally Nigerians that you wouldn't expect will conform with the basic investment theory. And we have seen that happen. So for some of our products that are short-term in nature, we've seen dramatic increase in usage of those products, which means a lot more people are keeping money in form of cash. And that will, it's more or less like informed by the expectation of uncertainty surrounding what is happening. But as the situation is increasingly becoming less uncertain, we are beginning to see behavioral change as well. So what helped us a lot in understanding this behavioral change was we're lucky to have upgraded our data stack just before COVID hit. So we're able to have a clearer picture of what is actually happening segment by segment, right? And this is, from our user base, we have more than 70% of our user base are less than 30 years. So these are young people making money decisions that actually conform with traditional investment theories. So yeah, I agree with the poll to a very large extent in terms of the sector that is positively impacted, payments. A lot of people are embarking on digital payment right now, and lending, e-commerce are being hit the highest in terms of the negative impact.
Okay, thanks, Razak. In the interest of time, I would like us to go to the next poll just to get the views of our participants on the next question. So Frank, can you put up the next question? So we'll close the poll in the next 90 seconds, just so that we can move quickly because we're running out of time. So for Sheye, Razak has kind of touched on, the impact of COVID. What do you think would be the new normal? If you can just say that in 2 minutes, I really appreciate it.
Okay, so I think that there will be higher demand for lending from people who want to borrow money, but I think that there will be less people willing to lend as much. I think that investment patterns would continue to do what they do. So as Razak said, people wanting short term during times of uncertainty and long end when things become a lot more certain. I think that payments will just see a redistribution, so things moving from what they normally are to other things that they now need. So I don't think overall they'll be badly hit. I think that they will just, they'll just have a different distribution in terms of what they have. I just think that post all of this that happens, I think that you might see some form of consolidation. Some industries, some players might get out of business because if you're in a space that is not profitable, the question is how long can you continue to do that without being hurt or being burnt? And even the probability of people being able to raise money during these times, will be significantly hampered by the COVID-19 uncertainty as it's a global problem. So I think that you might see a consolidation in the sector in the future out of need also for survival. So that's basically what I think would happen post COVID-19.
Okay, fantastic, fantastic. Yeah, thanks for that explanation. So I'm looking at the polls now. I believe you can see it, and I will just read out the question. Let me quickly end the polling. Yeah. So just read out the question. The question is: should the activities of the fintech players be more regulated to ensure investor protection? And 55% they agree. 55% they agree. 33% agree. So in fact, majority over, close to 90% agree. 5% are indifferent, 6% disagree, and 1% strongly disagree. Just to give context, it's a double-edged sword, right? So most of these fintech players, no one know where they are, right? For the traditional companies, you can go to the banking hall and say, "Guy, where is my money? What is going to happen to my investment?" Fintech players are just there's just an app and maybe a phone line that if you call, they may respond to you, they may not. On the flip side, we know that too much regulation increases the cost of doing business. It affects the ability to provide quality service to the customer. So yeah, so based on what you've seen on the polls, what do you think? What are your thoughts? Share, over to you.
I mean, I would have been in the agri camp because we need some form of regulation, but too much regulation, like you rightly said, stifles innovation. So for me, I would have been in the agri camp, not in the strongly agree, because it's also a question of how willing are the regulators to work with new companies and new products, and finding that balance is not as simple as one might like, or as easy as one might like. So that's basically my own take on this.
Okay, sure. What about you, Razak? What are your thoughts?
Yeah, so first, I think there is something that we all need to agree on first, that fintechs need to be regulated. So that is not an if or all statements. They need to be regulated. So the extent of the regulation is what needs to be looked into, right? Because first of all, the regulators have a primary mandate of investor protection, right? So, and if you do not protect investors, especially retail investors, its impact on the integrity of the capital markets, right? And how the capital markets will be deepened and grow. If retail investors get bonds a lot more and the regulators aren't protecting them, regulating the players to protect them, you will continuously see retail investors actually shunning the capital markets. And when it talks about capital formation, capital acquisition, you actually need that segment of the markets a lot. You need that segment of the market to actually deepen capital formation, deepen investor participation, and so on and so forth. So the mandate of the regulators are very clear. Protect investors, especially retail investors, and of course, all other investors, and ensure the integrity of the capital market. So yeah, there's need for that regulation. But the how of that regulation is what matters. For example, let me just point to one thing. There is this thing: if you want to open a stock brokerage account, part of the forms that a company will give it to you is there is this part where they will ask you, when did you open your bank account? I don't know if you've experienced that. So if you open your bank account in 1990, you have to put it there. I opened my bank account in 1990. For example, that kind of regulation is not, it's regulation, but that's not necessary. Why do I need to remember when I open my bank account if I want to open a stock brokerage account, right?
Just to make your life difficult.
Yeah, that's just an example, right? I need a utility bill when most Nigerians don't have access to utility services. There should be like alternatives, digital alternatives to make those things a lot easier. And those are the things that can improve the overall user experience and increase retail participation in the industry.
Okay, sure. So it's basically for regulation, but with purpose, looking at the substance instead of the form.
Exactly. And looking at how things have changed, compared to where we were 10, 15 years ago, the realities of the current markets, not just in Nigeria, not just in Africa, but globally. 10, 15 years ago, a lot more people weren't online. A lot more people were not digitally involved. But right now, the first thing people think about on a daily basis is their digital life. And that needs to reflect in the way regulation is handled as well.
Okay,
just
great.
to add to that, though, I think we should take advantage of the BVN solution that is out there, because with the BVN, you virtually have everything that you need to know, right, about the person. So I think the access to the information that is there just changes the whole dynamic, So I think that's, I think there should be a lot more regulators who are thinking about what we have versus what we need and the nature of where we are operating. So if we had that, then, things would be good.
Sure. No, very, very valid points. I believe that, there are regulators on this webinar, and that point to be noted. So let me go over to the participants. I have more questions, but I would also like to hear some of the views of the participants, or just put up questions. So this is from Ademola. He says that over time, the Nigerian banking sector has had a few major shifts, like merger, basically consolidation in the FinTech and co. And he says, what strategies would you suggest to a commercial bank seeking to actively engage their young working customers, to retain them for longer periods? Who wants to address that? Razak Oshe. Or do you want to be advising the commercial banks? It's like, is it a nay?
Okay, so I think it's very simple. Well, maybe not that simple when it comes to execution, but in terms of what needs to be done, it's very simple. It's just how are the existing fintech companies whose core customers, are actually these young users? How are they able to attract them? How are they able to retain them? I think those are the questions that they need to ask. And this thing boils down to the first definition of fintech we gave earlier, right? Create a fantastic user experience for you. Nobody wants to go through hell to get things done. Everybody likes comfort, even though we may not say it, but we all like comfort. We all like convenience. We like affordability, right? So those are the core tenets, those are the core principles that need to be put into consideration when products are being developed, when products are being deployed, and when services are being rendered, right? For example, there are 3 stages. You have an idea that you want to execute as a bank. Okay, the idea is we want to do digital, fine. And the second point is, how do you do it? Like, how do you deploy it? Are you building an app? Or are you re-engineering your entire backend system to ensure that it conforms with that digital experience? Then the third is, how do you keep servicing the customers? When customers send an email on a Saturday, do you wait till Monday to tell them we don't work on Saturdays, that we only work during the week? Or when they send an email, do you tell them you have to get the problem resolved in 2 weeks' time? Those are the little issues, that affect the overall user experience. Those are the things that affect retention. Those are the things that build trust. When users send an email and you respond in 10 minutes, in 15 minutes, whether you like it or not, you've sown a seed of trust in that user. The user will come in again because the user believes in the system, that anytime I have an issue and I send an email, I get a response instantly. So that continuous trust building is what matters. And those things don't happen overnight. It's a culture that needs to be built. If that culture is built, if that culture is maintained, you continuously have users that you retain. So it's very simple to say, as I mentioned, but the execution is actually where the issues are.
Execution and change management, changing the way you do things. People are stuck in people just prefer to stay in the comfort zone. So understood. Let me just quickly dive to the next question. And, this is from Charles. His question is, what are the risks associated with the fintech space in Nigeria, and how can such risk be averted or managed? And just so that you also highlight this point, it'd also be nice to talk about cyber security. That's very critical. You guys have access to customer data, which should be kept confidential. So please, who wants to talk on this point? I'll just leave you open. Please, Shay and Razak.
Yeah, so for me, it's a topic that touches my heart, in terms of the pain points, right, or the risk to the fintech space, right? Things around data security. I think that how do you control the data? How do you control where the data goes? How do you even use the data? And how much, or is it adequately regulated in terms of who has access to that data, and how is it shared with third parties? I think that's for me is kind of like the biggest risk, in terms of what managing people, because obviously your staff have access to that information, right? So how are fintech companies protecting the information that they currently have without that information causing issues? Because for all you know, right, you could have some guy sitting there in some office, whether it's a bank, a fintech, any financial institution, who has access to all your information, all the information about you, and is selling that information, giving that information to somebody else who then uses it to whether commit fraud or take things off your road. So I think that a lot of fintechs today are spending a lot of time and a lot of money to ensure that those sort of things in terms of access is monitored and controlled. So ensuring that people who have access are only people who really legitimately have a need or have reasons to access that information. That's one. And so also increasing the level of encryption around how that data is preserved and protected, and who can actually download or even get that information. I think for us, that's actually where a lot of money is being spent on these days. And I think that a lot of financial institutions are actually taking or towing that line. So that's what I think it is, and that's my own position on it. Razak, what do you have to say?
Yeah, I agree with you. 100%.
Just before I go ahead, Razak, right? From a customer perspective, how do I know a fintech company that has the best level of security? So, for example, you've seen very big companies have security-related problems. The likes of TikTok, even Zoom had security-related problems. So, how do I know? It's very difficult to verify, the technology that the companies use to ensure, security of user information.
Yeah. So thanks for that. So I think the security issues and the risk ramifications surrounding fintech solution provision and banking is not just on the companies alone, actually, right? It's also about digital life, right? So, for example, for me to have access to my banking app, I need to have my password, I need to have my login details, I need to have my PIN. We've seen customers who actually store these login details in a place where others can actually access it. So if someone has access to your PIN, someone has access to your login details, right? It doesn't matter the amount of security or risk framework that company puts in place. People can actually have access to that. So for example, we've seen people lose their Gmail accounts, right? Just because someone gained access. We've seen people lose their Twitter accounts or their Instagram accounts. So there are a lot of stages of risk, potential risk exposure for people who use digital services. So this is not just on the companies alone, but it's also on how we're able to protect our personal details. So, but overall, for the companies, it is very important that they do a lot of encryption. I think that's just the first principle, especially if you're working with people's debit card credentials and credit card credentials or banking applications. The first thing is encryption. And that boils down to the domain expertise of the company itself. Does the company actually know what it's doing? Or it's just one mushroom company that just, started somewhere and, put up a website. Anyone can develop a website right now. Put up a website and ask you to start saving or start investing, and it's promising you 40, 50%. Those things are, red flags that one needs to look at. So it is very important that you actually understand who are the people behind those companies. So encryption is very important, and working with a third party that is certified to ensure that data is protected is also very important. Those things are like the initial conditions that need to be met. So if you're working with, if you're handling people's cards, you need to have a company, a payment gateway provider that is PCI-DSS certified, for example, right? Those are the things that really matter. But overall, being risk conscious and being able to protect your identity or your login details, credentials, is actually very, very important. And it's the responsibility of all the parties involved, not just the companies, but also the individuals who use those digital services. Because we don't it's not a face-to-face thing. What we need is you represented by your credentials. So if someone has access to those credentials, the person might actually commit fraud, so to speak. So it's a responsibility of everybody. And because we are beginning to have a lot of digital presence in our lives, I think the education is getting stronger and stronger, and people are becoming more conscious of where not to put. Some people can even store their password on phone, like Gmail password, on phone, just because they want to remember it. So being conscious of that is very, very key.
Okay, thanks. So it's basically a two-way thing, from the service provider and the user. Yeah, I agree. So let me just go to a quick question, right? Which is regarding career. What skills are relevant for those who want, a career in this industry? Does everyone, to get employed in the industry, does one need to become a developer or what? What skills are relevant?
There are different roles. There are different roles in fintech for people to play, from design people, so people who can come up with good design workflows to be able to say, okay, these are unidentified problems. So we need people who are good problem solvers. So people who can say, okay, fine, this is the problem that people or the user or the customer will be experiencing, and defining that problem that needs to be solved, and then designing the solution to solve that problem. And there are different people that would actually create those, come up with all of those things. And those people don't necessarily have to be software developers. I think that's very extremely important that we highlight that. Then from the fixing all of those issues, you then go to the, the back-end solution, like, how is this experience better than the last experience? So people who are continuously stress testing what we are offering and coming up with better ways of doing what we are currently doing, and also addressing issues that might not have been addressed before. So I think that there are roles for people who actually don't have software engineering or even finance backgrounds, who can actually work in this space. So that's how I see it. And not to talk about customer service or marketing, that, those are other things that come afterwards, right? So.
Okay, sure. So diverse skills are required. I'm looking at the questions from the group chat, and it boils around trust, right? So there are many fintech companies that are coming up. How do you know which one to trust? And you also have companies that are, enable people to do transactions or invest outside the country. So how can one drive trust in that space? And in fact, I'm connecting the dots with the trend I've seen, which is that most fintech companies that have raised money to date, raise money from, they get their funding abroad. It's that trend keeps on increasing. You have more foreign participation or investment in the fintech space. Now, the local people want to invest, however, they don't know which one to trust. So you have the trust issue from an investor perspective, and you also have the trust issue from a customer perspective. So, Zach, how would you advise them?
So it's a very, very important question, and it is not something that can be addressed one-off. Trust is a process, right? it's a building process. It gets stronger and stronger over time. So from the customer point of view, I think there are certain things that customers must be aware of. And this boils down to financial education as much as it's also a function of how sincere we are to ourselves. If a fintech company comes out to say, for example, let me say a savings and investment company, for example, comes out to say, we are offering you 30% per month, right? There is that greed element in us that might, question whether that thing is true or not. We just want to put in the money in there. But inside you will know that something is definitely wrong. But there is also that lack of financial education because frankly speaking, what we have seen, some people don't know it's not possible. Some people just feel that if you can't give them 30% per month, you are just a wicked soul as a company. That 30% per month is actually very possible. So that's the part of financial education that needs to be handled. And that needs to be handled not just by one party, but by all the stakeholders, all well-meaning stakeholders in the industry, from regulators to the existing players to advocacy group and all of that. That element is very, very key, especially knowing that the cohort of the demography of Nigeria and most emerging markets that participate in patronizing digital service is actually the young people, right? Less than 30 to a very large extent. And unfortunately, a good number of that cohort does not actually have a good understanding of how investment and financial products work. So that's one part. The second part with the investor is to actually understand the regulatory framework and the structure of the company. Is it a company that actually has good partnerships or a company that actually has a solid foundation? And that's from making sure that the due diligence is done. So for an investor, basic due diligence will be conducted to ensure that the company actually exists. The company actually is doing what is expected to do. But that doesn't take out the business risk, right? The business risk associated with starting a company. And statistically, we all know out of 100 startups in the next 5 years, probably 90 will die. So there is no amount of due diligence that can take that business risk out of the equation. But what you can actually take out of the equation is misrepresentation and so on and so forth, which can easily be uncovered by carrying out your due diligence. And from what I've seen, most of the investment that's coming from outside the country, they actually carry out a good dose of due diligence to ensure that they're actually putting money where they want to put in the money. And most of the VCs that are African focused or emerging market focused are setting up, base in Nigeria, in other African countries, where they actually come to do physical sightseeing to actually know you exist. Talk to your customers to actually know you actually have the customers you're talking about. And there are certain things that can be looked at generally that can be used to confirm what you're saying compared to what actually is the truth, right? So the extent of due diligence, the level of due diligence or how to carry out due diligence is becoming a lot easier right now. So that can easily be covered. But from the customer point of view, we need a lot of education, really. And people need to be, to be truthful to themselves too. Don't patronize things that are red flag from the word go. You will know. There are certain things that are very glaring. That's, unfortunately, we had a lot of people who actually did MMM. People actually knew it was, scam. It was Ponzi. Even, more educated people, unfortunately, it is the great part of that human nature, that acted in some ways. But that's one thing, financial education, and we also need to be sure that we do our own personal due diligence on the companies that we are patronizing.
Okay, sure. Thanks, Razak. Sheye, just to round up because we're really coming to the end of this webinar. So, any last words regarding building trust in the fintech industry as well as investment management?
I think that some level of regulation and standardization would help to inspire and improve confidence. I think that that's one. I also think that the fintechs showcasing what they do and being transparent, the increasing level of transparency in terms of their operations and how they do would actually help the industry as a whole in terms of attracting more investment, whether it's local or foreign. And I also think that that can also, even trust can also be built via partnerships. So meaning that the quality of the vendors that you use could also improve whether it's your brand or your trust index, as it were, in terms of the quality, in terms of the people that you interact with, as people, friends, as they say, friends, show me your friend and I'll tell you who you are. So, friends tend to fall together. So if you're in the midst of bad company, then you're going to necessarily have problems. But if you have good partners, then that also helps build some level of trust around the business and the industry as a whole. So that's it for me on trust.
Okay, so thanks, Shay. So I guess we'll just have to end the questions now. And I've seen that there are so many questions, right? So I think Frank is asking for more time. Yeah, but I'm conscious of the of the limited time that we have. So what I'm thinking is that we may, Frank. So what I'm thinking, we really have to end now. So what I'm thinking is that there are two things. One is the questions that we have not been able to address. We could, send a note. We could respond to them offline. And secondly, both of you have pointed out something that is very critical, which is with respect to education, right? Enlightening the public on fintech. So we may have another series talking about this subject matter, talking about fintech, and hopefully it will be in light of the new normal. We hope that the next time we're talking about it, the pandemic, the impact of the pandemic would have diminished. So on this note, I would like to thank you, Razak and Shay, on behalf of the CFA Society Nigeria and the board. I would like to thank you, for sharing your views on the fintech industry as well as the investment management industry. And I also want to thank the participants for their contribution, through the questions they've asked, as well as, sharing their thoughts on the industry. And, I wish everyone a blessed weekend. I would also want to say that, let's stay safe and let's, use our mask in public places so that we can, reduce the spread of this of this coronavirus. Thanks, everyone.
Thank you.
Thank you very much.
Yeah.